Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and the Tulsa markets. I've got people that buy all over the country. In other words, they buy from me, but they also buy in Texas. They may buy in North Carolina, may buy in Florida. Investors with a lot of money are actually looking for the best markets they can do. And I've talked previously about the advantages of the Oklahoma market. It's very consistent, it's very steady, very predictable. It's a low risk market. But I want to talk about affordability right now, because that's a word that you're hearing a lot on the news, a lot from the federal government is affordability. I think personally, it makes a big difference in terms of your real estate investments. So what I'm going to do is push the idea that the best thing that you can do, especially if you're a new investor, is to invest in an affordable market. And here's why. If you buy one property, and that's the way you're going to start out, you're going to buy one property if you've never bought an investment property before, and you're going to say, I want to see if this system works. I want to see if this market works. But you're not going to stop there. And the reason why you're not going to stop there is because just like if you're in the stock market, you've got more than one stock. In the housing market, you've got more than one home. You're trying to kind of diversify a little bit, maybe even in the same market, but what you're trying to do is get to a point where you have enough property that a vacancy doesn't hurt you, because vacancy is a fact of life. Even if it's 15 days on the second, third, or fourth renewal, that is vacancy. And you want to make sure that if it's a 30-day vacancy, and you have 5 properties, that the positive cash flow from those 4 are going to pay for that 30-day problem that you had in not getting someone back into the home. That's really critical for you. And I've always said about 5 properties is really a place that I think investors want to be. Again, you're not going to buy them all at the same time. You're going to start out with 5 properties, but you're going to get there. And an affordable market has an advantage to you. If you're buying a $400,000 home, where you could buy the same thing in Oklahoma City for $250,000 home, you're out a lot more money for that $400,000 home, and good chance you may have negative cash flow. So the idea, if you want to get to 5 properties, and I'm not saying just Oklahoma City and Tulsa, I want you to investigate markets where we can start in our market at $214,000 for a new home. You look at the cash flow and you say, okay, this is where this makes sense, because I buy a property this year in 2026. It's working extremely well. So I'm going to buy another property from Oklahoma in 2027, et cetera. Maybe you buy 2 in 2027 if you have the wherewithal, because it worked out for you. But the point is, you're getting up to that 5 property safety, or that 5 property sweet spot. And you may go beyond that, but the whole point is you can get there a lot faster with an affordable market. And it's much easier to match up positive cash flow, because we're dealing with lower priced properties. Doesn't demand we get $2,000 or $2,500 a month in order to make it work. So affordable markets, especially to new investors, is something that I believe that you ought to look for. I've been having Zoom meetings with brand new people talking about these ideas. Give us an email and ask for a meeting, and I'll explain this in further detail, show you why it makes sense in the Oklahoma market, and then maybe we can get started in your investments in real estate.